You don't need a $100,000 down payment to own property, you need a strategic entry plan. So many people think real estate is this exclusive club for the ultra-rich, but that's just not true. It's about being creative, strategic, and understanding the system. What if I told you that you could start building a real estate portfolio and generate passive income without putting your business's cash flow at risk? It sounds too good to be true, right? Well, it's not. Hey everyone, I'm Alex. A few years ago, I was just like many of you hustling to grow my startup, pouring every dollar and every minute I had into my business. The idea of buying property felt like a distant dream, something I'd get to one day, but then I discovered something powerful: creative financing. I bought my very first rental property with just $5,000 in cash. Yes, you heard that right, $5,000. I did it by leveraging smart partnerships and a unique loan structure. Today, I'm going to walk you through 3 low-capital pathways that let you, as a founder or entrepreneur, add real estate cash flow to your life without draining your startup's bank account. These aren't get-rich-quick schemes. They are proven, actionable strategies that I've used and seen others use successfully. We're going to break down house hacking with special loans, digital real estate investing through crowdfunding, and the art of seller finance deals. By the end of this video, you'll have a clear roadmap to start your own real estate journey, no matter how small your starting capital is. So grab a notebook and let's dive in. All right, let us start with my absolute favorite method for beginners because it solves 2 problems at once: where to live and how to invest. It's called house hacking, and it's brilliant. The basic idea is to buy a property with multiple units, live in one of them, and rent out the others. Think of a duplex, a triplex, or even a fourplex. Here's why this is a game changer for anyone with low capital: owner-occupied loans. When you declare that you're going to live in the property you're buying, lenders open up a whole new world of financing options. The most famous one is the FHA loan, which is backed by the Federal Housing Administration. With an FHA loan, you can get into a property with a down payment as low as 3.5%. Let's do some quick math. On a $300,000 duplex, a traditional 20% down payment would be $60,000. But with an FHA loan, you only need $10,500. That's a massive difference. And if you're a veteran or an active duty service member, it gets even better. You might qualify for a VA loan, which requires 0% down. That's right, 0. You could literally get into a property with no down payment at all, just covering the closing costs. Now, here's the magic of house hacking. The rent you collect from your tenants in the other units goes directly toward your mortgage payment. In many markets, this rental income can cover your entire mortgage, plus taxes and insurance. This means you are essentially living for free. Any rent left over after the mortgage is paid is pure cash flow that goes straight into your pocket. So, not only have you eliminated your own housing expense, which is probably your biggest personal bill, but you're also making money every single month. And all the while, you're building equity in an asset that's appreciating in value. It's the ultimate financial cheat code for building wealth from the ground up. You're starting your real estate empire while someone else pays for it. It's an incredible way to get your foot in the door. Okay, so maybe the idea of being a live-in landlord isn't for you. You're busy running your startup and you don't have the time or energy to deal with tenants or toilets. I get it completely. That's where our second strategy comes in: real estate crowdfunding platforms. This is real estate investing for the digital age, and it's perfect for the busy founder. Think of it like investing in the stock market, but for properties. Platforms like Fundrise, Roofstock, or Realtime have completely changed the game. They pool money from thousands of investors like you and me to buy large-scale real estate assets. We talking apartment complexes, commercial buildings, and portfolios of single-family homes that you could never afford on your own. The best part, the barrier to entry is incredibly low. You don't need tens of thousands of dollars. On many of these platforms, you can get started with as little as $500 or $1,000. You can browse different investment options, from high-growth development projects to stable, income-generating rental properties, and choose the ones that align with your financial goals. My recommendation for founders looking for passive cash flow is to focus on what are called e-REITs, or electronic real estate investment trusts, that pay out quarterly dividends. These are essentially funds that hold a diversified portfolio of income-producing properties. Every quarter, you get a check or, more likely, a direct deposit from the rental income generated by those properties. It's true passive income. And here's a pro tip to maximize your returns with zero extra effort. Turn on the automatic dividend reinvestment feature, often called a DRIP. When you do this, your quarterly dividends are automatically used to buy more shares in the fund. This creates a powerful compounding effect. Your investment grows on its own, and the income it generates also starts generating income. It has a completely hands-off way to build a diversified real estate portfolio and create a steady cash flow stream that works for you in the background while you focus on growing your business. It's smart, it's simple, and it's incredibly effective. Now for our third strategy, and this one is for the true hustlers, the negotiators, the deal makers out there. It's all about finding creative solutions when traditional banks say no. I'm talking about seller-financed and lease option deals. This approach requires a bit more legwork and negotiation skill, but the payoff can be huge, allowing you to control a property with very little money down. So, what is seller financing? It's exactly what it sounds like. Instead of going to a bank for a loan, the owner of the property, the seller, acts as the bank. They finance the purchase for you. You make your monthly mortgage payments directly to them. Why would a seller ever agree to this? Well, you need to find a motivated seller. Maybe they own the property free and clear and want a steady stream of monthly income without the hassle of being a landlord. Maybe the property needs some work and won't qualify for a traditional bank loan. Or maybe they just want to sell quickly and are open to creative terms. By offering them a solution, you can structure a deal with a low down payment or sometimes no down payment at all and flexible terms that work for you. A powerful variation of this is the lease option, sometimes called rent to own. Here's how it works. You sign an agreement to lease the property for a set period, say 1 to 3 years. But here's the key. The agreement also gives you the exclusive option to buy the property at a predetermined price at any point during that lease term. This is incredibly powerful for a few reasons. First, you get to control the asset today without actually owning it. You can move in or you can sublease it to a tenant and start generating cash flow immediately. Second, you lock in the purchase price. If the property market in that area booms and the value of the house goes up by $50,000, that equity is yours when you decide to buy. Third, you can often negotiate for a portion of your monthly rent payment to go toward your future down payment. This means you're actively saving for the down payment just by paying your rent. It gives you time to improve your credit, save more cash, and get your finances in order so you can qualify for a traditional loan when your option period is up. It's a strategic way to get in the game now, even if you're not quite ready to buy. So there you have it, 3 powerful, proven strategies to get into real estate with low capital. We covered house hacking with an FHA or VA loan to live for free and build equity. We looked at real estate crowdfunding to passively invest in diversified portfolios from your laptop. And we explored the art of the deal with seller financing and lease options to control assets with little money down. The myth that you need a huge pile of cash to start investing in property is just that, a myth. What you really need is the right knowledge and a strategic plan of attack. Each of these pathways offers a unique way for a busy founder or entrepreneur to build wealth and generate passive income without sacrificing their business. The key is to find the strategy that best fits your personality, your financial situation, and your long-term goals. Don't let a lack of capital hold you back from building the life you want. The opportunities are out there if you know where and how to look. If any of these paths sparked an idea or made you rethink what's possible, do me a favor and smash that thumbs up button. It really helps the channel. And if you want more deep dives into creative financing and wealth building strategies for entrepreneurs, make sure you subscribe and ring that notification bell so you don't miss a thing. Thanks for watching, and I'll see you in the next video.